out of all the buyers that are live and active on Flippa's M&A marketplace, we have a subset of those who are what you would qualify as accredited investors, meaning they have a net worth above $1 million or an income above 200,000 or a household income of 300,000 annually USD. And that entitles them to passively invest into private businesses. And it allows us to market these rounds to these individuals and entities.
Hey everyone, welcome to another episode of Humans of Flippa. So today I have a special guest. His name is Laurits Just, and he originally was the founder of Bits for Digits, which was a platform that helped business owners to partially exit their business through different forms of financing. And he now works with Flippa, and he's launching something very exciting for business owners listening to this. It's called Flippa Invest. And this will allow business owners a simple way to raise capital for their businesses, to grow their businesses. So, Laurits, I'm super excited to have you here. How you doing?
Hey, Nick. Happy to be here. Thanks for having me.
Absolutely. Well, can you tell me a little bit more about yourself before we get started?
Sure. What do you want to know?
Just Bits for Digits, how you even got into this space, how you got to the point of working with us, specifically for Flippa Invest?
Sure. Yeah. So, going back a few years to 2021, during the, I guess, not peak of the pandemic, but, during COVID times, we were, my friend from college and I, we were both working at respectable jobs, I would say respectable employers, corporate employers. I was working in finance, and he was working in big tech. And we, I guess, had a bit too much time on our hands working from home, and we were going over ideas, kind of like marrying finance and technology. Like fintech was the kind of space we were looking at, and looking for white space that we could somehow create something new in. And we came across this blog post by a guy called David Heinemeier Hansen, or DHH as he's known as on Twitter. He was talking about how him and his co-founder, Jason Fried, sold a minority stake in their business, 37 Signals, which are responsible for products like Basecamp, which is a great SaaS business. They sold a minority stake of their business in a secondary, meaning they sell their own shares. It's a privately listed, it's not a listed company, it's a private company. And they sell those shares to a new person. In this case, Jeff Bezos, who actually bought, I don't know exactly how many percentages, but something like 10 or 20% from David and Jason. And this allowed them to take some chips off the table, kind of de-risk their ownership in their business. They had a good business on their hand. It was kind of still early days, so they didn't really know if it was going to go well or go bad. But in either scenario, by selling just a piece of it, they got to just get a bit of financial security. And so this type of transaction is not, it's not uncommon, but it's certainly not super common. And there's no place to really go where you can advertise, hey, I'm looking to partially exit my business. So my co-founder and I were thinking, well, maybe we should create that place, because not everyone has Jeff Bezos on speed dial and can just call up a high net worth individual like him to buy you out of a stake in your business. So we set out to create a platform. We called it Bits for Digits because of like virtual bits, and also bits like pieces being sold for digits, i.e. money. Mm-hmm. And hence, Bits for Digits was born as a partial acquisition marketplace. And down the road, we kind of pivoted to also include full acquisitions, just because there was a high demand from both the buy side, but also the sell side to, a lot of founders were like, maybe I want to sell just a piece, or I'm also open to a full acquisition with the right offer. So we ended up like saying, okay, eventually, after turning away a lot of people, we actually allowed them to do both. But yeah, we did this in Berlin. I'm from Denmark originally, hence the exotic name Laurits, I guess closest to Lawrence. But my co-founder is from Germany, so we founded the business in Germany, although he was based in Dublin and I was based in London before starting. And so we actually bootstrapped the whole business for 2.5 years before getting an offer from Flippa and selling the business and me subsequently being hired in the process. And so I'm now with Flippa, running a new exciting project, a new business arm of Flippa, where you can not sell and buy, but raise and invest in growing online businesses, and that's called Flippa Invest. So I'm happy to chat more about that, but also happy to talk more about my background and fit for this role.
Yeah, well, let's just get into Flippa Invest. So when you and I were originally talking about this, I mentioned, oh yeah, this sounds kind of like some alternatives in the space where you can essentially, as opposed to from the investor side, as opposed to buying an online business outright, you are investing into like a pool, and then others will operate it, and other investors own a piece of that business. You corrected me that this is something very different. It's meant to help raise capital. Can you tell me a little bit about just the difference, specifically what this is and what this, I guess, is not?
Yeah, absolutely. So Flippa Invest is not a fund. So we don't, like, I don't invest in businesses. I offer a platform that's called Flippa Invest, where you, much like our M&A side of Flippa, like the big marketplace on Flippa, you can list your business for sale. Similarly, on Flippa Invest, you can launch your round. So if anyone is familiar with fundraising, we talk about a fundraising round, because you can have multiple fundraisings in the life of a business. And so on Flippa Invest, we have, out of all the buyers that are live and active on Flippa's M&A marketplace, we have a subset of those who are what you would qualify as accredited investors, meaning they have a net worth above $1 million or an income above 200,000 or a household income of 300,000 annually USD. And that entitles them to passively invest into private businesses, and it allows us to market these rounds to these individuals and entities. So, yeah, we have nearly 80,000. I guess at the publishing of this recording, we'll have 80,000 accredited investors who are registered up for Flippa Invest, and who will be able to view the deals or the rounds that are launched on the platform. So if you want to raise capital to grow your business rather than exit, well, then Flippa Invest is a great option for you.
So, okay, I'm now speaking from the perspective of a business owner who is on Flippa thinking about exiting, or just maybe not even thinking about it yet. They want to continue operating. Why would somebody want to raise capital versus bootstrapping? I think you'd mentioned that you even were bootstrapping your business before. So how does somebody make this decision?
Well, yeah. So when we set out to build Bits for Digits, we set out expecting to raise venture capital because, well, neither of us were technical. Like we didn't know how to program, and we knew we were going to build a fintech startup, and so we set out expecting to having to raise capital to hire developers to even get started. But then we discovered no code, and we built everything ourselves. Got savvy with like website design and design generally in Figma, etc. And actually proved that we could stitch a lot of the functionality we needed together with these micro SaaS tools. And even though we had like 100 calls with the different VCs, we ended up deciding against raising, even though at that time, it was when you were ex BlackRock and ex Google. It was very easy to raise capital. I think even without those employer brands, but we decided against it. And that was in 2021. And then later on, obviously, it was harder to raise VC dollars. And then we were in a good spot, actually, because we had a very low burn rate and we had revenue. But if we had taken VC money, i.e. venture capital, you're on a clock to kind of get to IPO, I would say, right? You've promised your investors that you're going to build a decacorn, right? You're going to build a $10 billion market cap business. And it's basically grow or die. That's the mentality. That's the mentality of the investors typically that you're on board in a venture round. And I think not every business needs to be, and isn't, in fact, a moonshot business, a VC case. A lot of businesses, and I think including our own, ended up being not a VC case. It ended up being a good, small to medium-sized business, a profitable one. And that's kind of what you can raise with on Flippa Invest. It is, in fact, built around. It doesn't need to be a moonshot. The investors on Flippa Invest are more interested in healthy, thriving businesses. And I think if we had the option to raise on something like Flippa Invest back in 2021, we would have done it, because we were still struggling, bootstrapped, getting something entirely new off the ground. We were doing this with our savings, and we also got a grant. But I think people who don't qualify for grants or find it too time consuming, which we certainly did to get that kind of non-dilutive financing, then something like Flippa Invest is a great option to also get some new partners on your cap table potentially that can help with providing network and expertise, added value that you wouldn't have otherwise if you were just taking a loan in the bank. So I think going back in time, if we had Flippa Invest, we would have had an alternative route to growth capital, where we were kind of stuck between either we go full speed ahead on the VC route, and it's like a 0.1% chance of success here with venture dollars, or we bootstrap. It's it's very different paths, but something in the middle is where Flippa Invest comes into the picture, and that's why I'm very excited about it, because I could have really used that option myself.
Yeah. So as a business owner listening to this, one thing that comes up is, how do I know if my business is ready for something like this? Well, you said most people, the investors, they want a healthy, profitable business. What size of business does that imply? One that is ready to get to the next level? How do I know that I'm ready to get to the next level? Yeah. Yeah.
No. So actually, I should maybe correct myself. We, back when we started Bits for Digits, we, when we set out, we obviously had no revenue. We didn't even have a product. But we kept taking these VC calls all the way throughout, building our MVP, launching it, and getting our first customers, paying customers.
Wow.
So that is the point where Flippa Invest becomes interesting. There's only 3 requirements to raising capital on Flippa Invest, and those are: you need to have a digital business, an online business, right? It could be a software business, a mobile app, a media, i.e. content business, or even e-commerce. But then the second requirement is growing revenues. And that's where, if you're just starting out, Flippa Invest is a bit too early for you to raise capital. You can do that elsewhere, potentially. It's not easy to do, and you also tend to not raise on the best terms. But the investor mandate on Flippa Invest is very much finding businesses that are, as you say, ready to take the next step, not the first step. Mm-hmm. Flippa Invest, as the third requirement, is you need to have a US registered entity. So as of this recording here in January 2025, we're only live in the United States. So that's where you can apply to raise a round with our investors. So you need to have a US registered entity. That's a hard requirement, along with the digital business and growing revenues.
Yeah. But I also imagine there might be a fourth unspoken thing, which is like there's growing revenues. Maybe I'm growing 100% year over year, and yet I have a business that's still making, I don't know, $2,000 a month in profit or something. So it's still a very small business.
That's not a problem. So yeah, I should maybe specify here, profitability is not a requirement. And I think, in fact, it's hard to find businesses that are, I guess, very profitable and also in the market to raise capital, because they can reinvest the proceeds of their business into growth. Mm-hmm. So what we tend to find, and what the like founders who are in the market to raise growth capital are typically those that are on a path towards profitability, I would say. And it's not, we're not talking 10 years. We're perhaps talking a couple of years to profitability, or they're just around break even, as you mentioned, like $2,000 or something like that in profitability. But they don't need to be profitable for our investors to find it interesting, because growth cases are also very interesting as an investment. But again, you don't need to be Uber. You don't need to be the next DoorDash to raise on Flippa Invest. I mean, speaking of, like, I think neither of those businesses are profitable even now. So yeah, that's not really the mandate here. The investors on Flippa Invest are happy with a 5x or 10x return. That doesn't need to be a 1,000x return. And a lot of them are also happy with dividends, profit distributions, as well as capital, equity appreciation. So it's both arms that are both types of returns are interesting for our investors.
Yeah, and we'll talk about that right in a moment. So that's, I think, a very important point here, because sometimes I will see certain businesses on Flippa. So I also write the newsletter for anybody who doesn't know, and I have to choose which businesses I'll feature on the newsletter. And sometimes there will be enormous businesses making a ton of monthly revenue, annual revenue, but I see that big negative number, or like a close to zero number as far as their profit, and it seems like there's a lot of validation of that business, and yet I can't necessarily include that in the newsletter because of the current expectation of acquiring a business, which is that you want to buy something that's profitable right from the start, and you want to be able to recoup your investment within maybe 3 years, and that's kind of the framework. But it also, like, there's this ocean of these amazing opportunities, these gems that can become profitable and much more lucrative, but we just haven't been able to list them. So I think that's a good point here, is that we are actively now seeking those kinds of business owners that don't fit that typical framework that we've been kind of operating with.
Yeah. For sure. As long as there's growth, then it's could be a good investment. But obviously, metrics across different business types vary quite a lot. So if you have a high revenue as an e-commerce versus high revenue as a SaaS business, the margins will tend to differ quite substantially. But there are exceptions here, but as a general rule of thumb, it's hard to compare apples to oranges, which sure. I think in this case is kind of true. But for sure, profitability is not a hard requirement here, but it's still a desired quality of a business that's raising capital. But it's rarer to find those that are both super profitable and also raising capital. But certainly we have those too.
Yeah. Well, I think that's where the expertise of the business owner themselves comes into play. Like, there will be an e-commerce owner who knows that if they were just able to buy a ton of inventory that they have demand for, that's an immediate growth opportunity. They just need the capital, but they're unwilling to, spend their life savings in order to risk that. But then, yes, with the SaaS operator, you know your metrics, you know your cost per acquisition, your churn rate, and if injecting more capital into a certain area would actually be beneficial. So yeah, I can understand that it's going to vary case by case, and there's going to be a certain level of self-awareness from the business owner as far as, if I was only able to do that, then I'd be able to take my business to this level. Okay. We were talking a little bit about, you just mentioned some things that I don't even know fully understand myself, which is just like the different deal structures that an investor could offer, or that you could offer as a business owner when you're trying to raise capital. I imagine many of these business owners, they're experienced in running their business, but they might not be as experienced in raising capital, what terms to offer, how to prepare their business for what's about to happen, how to make sure that they're getting a good deal at the end of the day. So what is there guidance on this for business owners, or how does a business owner who comes into Flippa Invest know that, like, how do they manage this process?
Yeah, no, that's a great question, Nick. I get it also quite often from bootstrap founders who don't have experience raising investor dollars, how to structure their offering. And I'm not a financial advisor. I'm also not a lawyer. So really, they should be consulting professionals here if they're not sure how to do it themselves. What I will say is that we'll have a partner very soon who can help those who need guidance on how to structure their term sheets. But generally, Flippa Invest is agnostic to the type of deal structure you want to do. So if you're a founder and you know a little bit about what I'm about to say here, great. If you don't, you can Google it. But basically, you can bring the terms of your deal to Flippa Invest, whether it be a priced round where you have a certain amount of equity that you want to advertise, or that you want to issue new shares of and sell in a like share purchase agreement or equity purchase agreement. So that's one way to do it, as a priced round. Another way to do it is via a convertible note, where it's more, I guess, more basically it's more of a loan type situation, where you can get investors to have the option to buy shares at a later date via a convertible note. And similarly, a safe note is, I guess, the most popular method for VC-backed businesses to raise capital in the early days. So if you're a pre-seed company that hasn't even reached revenue, oftentimes you'll raise on a safe note, or even at seed stage. But then later down, Series A, B, C, you'll do a priced round. But all of this jargon is to say, you as a business owner can bring the terms of your deal to Flippa Invest and raise money that way. We do have kind of an onboarding process. We have the criteria, as I mentioned before. Obviously, if you're bringing super unreasonable terms, it's going to be very difficult for you to raise capital from investors. So it's not a sure thing to raise money. But if you bring reasonable terms, then you're likely to be able to raise capital from our network of accredited investors on Flippa Invest. But yeah, I mean, there's many ways to structure a deal, and investors will sometimes prefer one structure over another. But I guess it very much depends on which stage you're at with your business. Obviously, every business on Flippa Invest will be post-revenue, i.e. generating growing revenues. So we're not seeing pre-seed stage, as they're known as. We're seeing more seed and Series A rounds on Flippa Invest. We don't really see the later stages where you're making tens of millions of dollars in revenue annually. We're more seeing the I think the smallest business that is raising on Flippa Invest is generating, I think it is 10,000 in monthly revenue. We're also open to lower revenue, like monthly revenues, but then we have another business that's doing 200,000 in monthly revenue. So that's obviously like several million annually. So yeah, we have a kind of a big span in terms of the revenues that we see. But again, it also varies depending on business type, as I mentioned earlier, e-commerce versus SaaS versus mobile apps versus content and so on.
Yeah. So a few reasons why somebody would even want to raise capital. You mentioned taking some chips off the table to de-risk your own investment in the business.
Well, I think that is different. So I always try to teach founders, if there's one thing I try to teach them in terms of finance for their business, it's the difference between first dilutive and non-dilutive financing, and then secondly the difference between a primary and a secondary offering. And if we start with the first one, like dilutive financing is when you sell equity in your business and you basically forego ownership in your business, percentages or numbers of shares, same thing, in order to secure funding of any sort. And then you have, so examples of this include Flippa Invest, right? It tends to be with a promise of ownership, so equity funding or equity finance is known as. And that's the standard model for fundraising from private investors. But then you have non-dilutive financing, and that could be a loan, if you're revenue-based financing, or any form of debt tends to be non-dilutive, and so is a grant. So my co-founder and I got a grant to basically start our company with, and that was no ownership that we had to forego in the business in order to secure that funding. That's with a different promise in mind. But those are the differences between dilutive, because you as the owner of the business dilute your ownership in the business through dilutive funding, such as equity finance. And then under that category of dilutive funding or finance, you have a secondary and a primary. So a secondary is what Jason and DHH did when they sold a minority stake to Jeff Bezos in Basecamp, because they were selling their own shares, which means they are offering their shares in not a primary transaction, but a secondary transaction, because when they first bought the shares themselves, the shares were brand new in Basecamp, or I think the company was called 37 Signals, but and so that was a primary offering. The company was basically selling the shares to David and Jason, because they are the co-founders of the business. And that's, if anyone has ever incorporated a company, they will know that you need to basically put a price on the shares that you have just newly issued. And so that's a primary. So when you sell your shares to take chips off the table, you're selling your own shares, the ones that you personally own. And so the money from that transaction will go to you as the founder, and some, third party, another entity or person will buy those shares, and they'll pay you for those shares. But in a primary, they're not paying you, because the shares have just been issued from the company. And so the company will receive that money when you buy those shares in a primary offering. And that is fundraising. That is growth capital, because the company is getting the money, and you can now, as a company, spend that money on hiring, on developing new products, entering new markets, and doing marketing activities. And so that is what Flippa Invest is built for. It is the primary offerings of dilutive finance or dilutive funding. So that's really what we're doing here. So Bits for Digits was a pure secondary marketplace where we just help founders partially exit and take chips off the table. And Flippa, today, the main business of Flippa is all about selling the entire business. And so Flippa Invest is going into the primary space and offering folks that want to grow their companies, well, raise capital to grow your business, and that's through these primary offerings of newly issued shares, through a priced round or a safe note or another type of deal structure.
Got it. Does a company need to restructure themselves as an entity in order to participate in this? And this is me maybe showing more of my lack of knowledge in finance, but let's say I'm an LLC. I don't think you have, you set a price for shares and you buy those shares, right? That's more so on like an S corp or corporation level.
Correct.
So does somebody to even participate in this have to be structured in the U.S. within as a corporation or a certain entity before being able to sell their shares?
So it's true that you can have a sole proprietorship, I guess, and you can structure that as an LLC. But whenever you incorporate a business, you will have some form of equity, right? There'll be ownership to go around, and we have two different options on Flippa Invest for raising growth capital. You can either do a direct raise, which is to say you are looking to raise capital from maybe just one or two investors, or maybe just a handful, and that will not require you to do any type of rolling up of a number of investors into a single pool of investors. But that's what a group raise will allow you to do. So if you're raising maybe a bigger amount where you anticipate more investors and it starts to get cumbersome in onboarding each investor to your cap table, that's where a group raise, where we set up an SPV, a roll-up vehicle or a special purpose vehicle, will allow you to group all the investors and pool them under an entity and then raise your capital more efficiently, I would say, and also easierly for admin and tax purposes. And we have a partner called Sidecar that helps form and administer this SPV for your round. But the direct raise is where you would have to onboard each investor to your cap table and structure all of that yourself. Whereas if you do an SPV, i.e. a group raise, you have one line item on your cap table of this entire pool or group of investors, which makes it easier to basically manage because they all have the standardized terms under your round. Whereas if you do individual investors, I guess you could potentially have separate terms for each investor, and it just makes it a bit more cumbersome to manage those on your cap table. So, but certainly there are pros and cons. Like if you want people to be a bit more active potentially in your business, a direct raise could be a good way to achieve this. But if you want to do the group raise, then you do need to have either an S corp or a C corp. But for the direct raise, you can have an LLC or any other type of business entity. Got
it. Okay. And this is again coming back to the whole all I know as a business owner is that I do know that I want to raise funds because I see this opportunity, but I don't know all these things that you're describing. So going back to what you said before, you think it's best to independently, as the business owner, hire a financial professional in this space to help you first decide, like, you should raise this amount or structure this in this way, bring on these, like, this many investors because it'll become this kind of deal. Is that just a separate conversation that should be had before arriving at the table with Flippa Invest?
I think a lot of folks overcomplicate it. There are many great examples of simple deal structures that you can find online. I'm not going to recommend any of them because I'm not a financial advisor, and I'm also not a lawyer. But a lot of startups each year will go with no experience, not having worked at BlackRock, not having worked at a venture cap, and they'll go and raise millions of dollars from private investors. And I mean, I think at the point where, legal advice is especially prudent to seek out is when you have a bigger business on your hand. But if you're a smaller bootstrap business, and you have a certain number in mind that you would like to raise, well, go have a look at, how much is your business worth? We have a valuation tool on Flippa. You can go and you kind of punch in to get a little bit of a feel for what your business could be worth. Obviously, keep in mind when you do use valuation tools like Flippa's, the number you get out is looking at past performance and not on future opportunity. So there's a bit of a premium involved when fundraising, because investors are buying into you going and growing your company into a valuation that's a bit higher than if you were exiting. So that's something to keep in mind. But yeah, I mean, look, if you have the resources, always great to have legal advice, to have some kind of a financial advisor involved in setting these types of deals up. But there's so many templates online that you can use from great serial entrepreneurs who have raised millions of dollars, and so you can use a safe note that stands for simple agreement for future equity. That's one that's very heavily used for early stage startups. But I think a price round is just so simple, right? If I want to raise, let's say I have a business and it's doing, let's say it's doing 2.5 million annually in revenue, and I want to raise I don't know, 500,000 in growth capital. Then let's say my business is worth my annual revenue. Then that's a $2.5 million valuation on my business, and I want to raise $500,000 to grow that business. Then let's say my business is raising at a $2.5 million pre-money valuation, and I'm going to give away basically 20% equity for raising $500,000. That's one way to do it. And then the kind of terms that you want to afford your investors can be very basic. You don't have to give up board seats if you don't want to. You don't have to give certain liquidity preferences. I think that there's a lot of mishaps from founders who raise capital from venture capitalists who have all these special rights, which will leave the founder high and dry in case of a exit event that doesn't meet the IPO or $10 billion mark. And I just, that's why don't overcomplicate things. Investors that are divas and want side letters and all that stuff, you don't have to raise from them. You don't have to raise anything if you don't want to, of course, but you can make really simple terms, and most investors are reasonable and will sign up to reasonable terms.
Okay, cool. Does a business owner have an ability? You mentioned before about the benefit of working with investors who are experienced in certain industries or maybe specialists themselves who can pretty much provide advice and guidance for how to, or networking that will enable that kind of growth. Do business owners have the opportunity to select their investors, or I guess look for investors based on their background or access to things, networks?
Yeah, so the way Flippa Invest works is first you apply to raise capital, because we have a bit of a screening process, right? I'll hop on a call, I'll talk with the founders, and then if there's a fit here, we're going to launch your round to our 80,000 accredited investors. And then these investors will basically be able to view your offering, and they can request access to your deal room. And that's where you, as the founder, will start to engage with these investors. And they all have profiles. So you can actually check them out and see, is this someone I want to engage with? Is this someone I want to try and sign for and close for my fundraising round? And we have family offices, we have private equity firms, and we have a lot of exited founders and high net worth individuals with networks on LinkedIn or on Twitter or both. You can get a bit of a feel for who they are. You can ask them questions. They can ask you questions. And so there's no like forced, you have to engage with all the investors or you have to sign all the investors that come to you or anything like that. Like investing is different, I guess, to potentially, exiting, in that it's a lot about chemistry. So if you don't jive with a person, then it's going to be difficult having an ongoing relationship where you're going to be growing your business and they're going to be on your cap table. So it's very important that you connect with the investors. I would maybe put one caveat in that and say, if you're raising a bigger round, let's say you're raising $1 million on Flippa Invest, and you're doing it the group raise route of setting up an SPV with us through Sidecar, then maybe you don't need to wine and dine every investor. You can onboard them, take their investment dollars and then pool them in a vehicle. But it's still a great reservoir for you to update your investors as you should on a regular basis of how it's going. And then also ask for help. Is there anyone here who can introduce me to X, Y, and Z? Anyone here who has experience doing X, Y, and Z? So on and so forth. So investors can function as advisors as well and kind of mentor you if you need it. So it's definitely a good thing to look out for anyone that comes to you and is interested in investing in you who can bring more than capital to the table. It's what we call added value. And it's why accredited investors are known as smart money. Because the money comes with intelligence, I would put it. Sure.
Awesome. And when will this be available? Flippa Invest ability to actually start this?
Yeah. So we're starting in the US. We're launching next month. We already have a handful of great businesses signed up to raise capital, but we still have a few open spots left. We're going to launch a cohort here for the initial launch of Flippa Invest. And then we're going to have applications open on a running basis for you to launch your round to our investors on an ongoing basis. But for the initial product launch of Flippa Invest, we do have a cohort of businesses, and we're going to obviously make a big splash and try and garner a lot of attention. And it's certainly beneficial if you can be part of that for your business exposure to all of our investors. So yeah, if you want to be part of the launch next month, apply to raise growth capital on flippa.com/invest. And then I would be happy to review and to get on a call with you and discuss more.
Okay. Awesome. Yeah, I didn't know there was a limited number of spots. So that's good for anybody listening to this as far as just applying earlier than later. And flippa.com/invest. So I'll include that link in the show notes as well. So anybody can just click over there. Well, awesome. Laurits, this has been a great conversation. And if anybody has any questions about flippa.com/invest, maybe ones that I probably did forget to ask, can they just go to that page and try to get into contact with somebody, or how can somebody just ask more questions?
Yeah, we're gonna have a page. We already have it, flippa.com/product/invest. And that's the landing page of, for anyone looking to raise capital, they can find all the information there. But I'm also happy to obviously answer emails. So my name, Laurits.just@flippa.com. If anyone wants to basically forward an email and just, I'm happy to hop on a call. But otherwise, I'm available on LinkedIn. I'm also happy there. If you just search my name, Laurits Just, I'm happy to connect.
Okay. Awesome. Well, Laurits, thank you so much for your time. And thank you to all the listeners. And we will see you on the next episode of Humans of Flippa.